Picked the wrong week to quit sniffing glue.
Oh, man. I'm not in sniffing glue, but let me tell you, this has been a tough week. This is Larry Gonzales with your Mortgage Market Minute. I talk about the housing market, things that are going on that are affecting our housing market nationally, but also locally. But before we go farther, please like, comment, or subscribe to my YouTube channel. So where are we at right now? Well, prices are starting to come down. One of the things that we're going to go over today is the HBR Honolulu Board of Realtors housing report for the month of September. So we'll get into that. We'll get pretty into detail on that, actually. But prices they're going down, but really over the course of this entire year, they're pretty steady. Inventory's going down. I'll show you that as well. On rates, well, let's just get into rates right now. All right, we've already eclipsed the 20-year high for interest rates. A couple of weeks ago, we got into the sevens. Well, we are solidly into the sevens now. Mid-sevens on conventional, and we are at high sixes and low sevens on VA right now. What is driving that? The big driver is inflation. Fed is raising the Fed funds rate because they got to bring inflation down. Inflation is no bueno, and it's not getting better, and that's kind of what we got going on this week. We have a lot of stuff going on this week, and I'm talking on Wednesday, and so we still got at least one more report coming out tomorrow or Thursday. Today, when this gets released, that will be the consumer price index, but the producer price index came out today, and it actually was a little worse than what was expected, 8.5%. The core actually was a little better than expected, but still not enough improvement to tell the Fed that, you know what, we can stop raising the Fed funds rate. As a matter of fact, we'll see what the CPI, Consumer Price Index, says, but expectations were that the CPI is not going to be very good either. So expect really interest rates to keep going up. So the next big report will be the PCE, the Personal Consumption Expenditure Report, which will be out at the end of this month. We got high interest rates right now. I'm going to go over here in a minute. One of the programs that we're using to help buyers, we're using this program called a seller buy down. I'll show that to you right now. A friend who's a lender on the mainland, and she gave me access to her calculator, and I kind of like it, so we're going to use it right now. We're going to play around. I'm going to show you just an example. It's good to see. I can talk to one, but until you see it, and it's hard to understand it, right? So this is a mortgage calculator I have, and it's giving an example of the mortgage payments on a mortgage. You can put any number in there. We're going to go with $800,000. They're going to have this is a VA loan. We're going to do a 2-1 temporary buy down, and a buy down is basically where you're using seller credit or realtor credit to buy down the rate temporarily, and this is a 2-1. So that the 2 stands for you're going to lower the mortgage rate by 2% for the first year, and then you're going to lower it by 1% for the second year. Now, the third year, it's going to go back to whatever it is you locked in at originally. And obviously there is risk there. There absolutely is risk there. But the risk is, will interest rates be in the sevens, say 7% is what we locked in at as an example. We're going to use that here. 7% is your example. All right. And monthly tax and insurance, roughly $250 a month. The cost to do this buy down in particular at $800,000 loan is $18,646. So you're going to need to get about $18,400 or $646 credit from your seller. And right now I'm seeing that. I know I have one client who's got a $35,000 seller credit. So to think that it is not something that you're going to see, think again. All right, au contraire, mon frère. So what does that do for you, though? All right. So that buy down, year one buy down, your mortgage payment is going to be $4,544 and change. All right. That's actually pretty affordable for most folks. That second year, it's going to go up about $500. All right. So $5,046. That third year goes up at 6%. or excuse me, back to 7%. It goes up to 7%, and your mortgage payment will be $5,572. Now, when I approve you for the loan, I'm not approving you at 4% or 5%. I'm approving you at the 7%, all right? Because, again, no guarantee that rates are going to be lower than 7%. But I got to think, and we're going to talk about this later, that rates will come back down. But this tool here is really helping clients because within 2 years, you should be able to refinance and get somewhere in between that, right around 5%. Because I think rates will come back down into the 5s. I used to think they were going to go back in the 3s, but they may, but they're probably not going to go down that much. Again, crystal ball's kind of muddy there, but even if you're in the 4s or the 5s, that's still affordable. So that's kind of what the seller buy down is, and it's really working well for a lot of my clients. So let's get back into the housing market, and we're going to talk about the Honolulu Board of Realtors housing report for September. All right, you'll see it on the screen. Single family home median sales price $1.1 million. That's 4.8% higher than last year at this time. $502,000 is median sales price for condos. That's up 5.1%. Sales, all right, sales in the month of September, single family homes down 34%, only 278. 496 sales for condos, down 19% year over year. And that goes to a lack of inventory. I'll kind of get into that here in a minute. Average sales price for single family home, though, not the median. The average is $1.3 million. That's up 1.4%. So not too much. And then and that's year over year. And then condos, average sales price $607,000, just up almost 9%. All right, here's kind of the days on market. All right, we're seeing a big increase, a huge increase on single family homes. Days on market 18. All right. Condos, though, are pretty steady at 14. All right, last year we were at 11%. Last month we were at 13%. So days on market, homes are staying on the market a little more for condos. Again, why not a lot more? Because condos are still affordable, people. All right, but 18, we went from 13 days on market in August to 18 in September. So starting to see these, especially when you look at $1 million homes, that's the average price and median sales price. That's where most of the homes are, and that's where between 1 and 1.5, they're sitting on the market. Just had another house in my neighborhood go on the market. They're probably asking 1.5, and we'll see. It's right next door to another house that's on the market for 1.59. So we'll see. So let's one other item. I like to point out months of inventory. All right, we need 3 to 6 months of inventory to have a balanced market. We're not quite there. We're at 1.9 months of inventory, which is up from 1.7 last month for single-family homes, and we're at 2 months now. All right, we're at 2 months of inventory, which is last month we were at 1.8, and a year ago 1.8. So not a lot of change in inventory, but for condos, again, condos are still affordable. But for single-family homes, starting to sit. So let's go ahead. Let's get into this HBR report. I love this report, man. I get so excited, and a good friend, a great realtor, Janelle Romero, she provided this to me. So thank you so much, Janelle. You are awesome, and you have a beautiful family, and I'm just really glad to have you as a friend. So thank you. So let's get into this. All right, let's break this down. All right, I'm going to get into 5th month in a row. So for condos, 5th month in a row, we've had a decrease in closed sales. So in May, we kind of peaked at 688, for the year, and then since May, we've kind of gone down. And really, for single family homes, well, I'll tell you what, we haven't had the 278 closed sales. If you look at this, 278 closed sales, we haven't had a number this low in closed sales since February of 21, and really before that was right at the beginning of COVID. So it's the interest rates really are starting to have an impact on the number of closed sales here. Median sales price, 1.1 million. Now, we've been over 1 million since August of 21. That's when we hit 1 million as a median sales price. We hit 1.1 million in February. That's kind of where we peaked in February, March timeframe. But we're still 1.1. They're still steady. All right. So are home prices going down? No, they're not. All right. Now, if interest rates continue to go up, expect them to go down a little bit. And if you look from our all-time high on the median sales price, 1.57. Correction, May. All right, May was 1.153. All right, was the max median sales price, and now we're down to 1.1 million. So it's a $50,000 difference in the median sales price for single-family homes. If you look at condos, though, we've been pretty steady, 500,000 since August of 21. So for over a year, median sales price has been pretty steady. Home prices, they're not going down. They're not going down right now. We're not seeing a really big indication. Again, if interest rates continue to go up, yeah, they're going to start to come down a little bit. But I tell you, once we get rates start to come back down, prices are going to again continue to steady and then start to go up. And you see a lot of homes staying on the market longer right now. Again, my neighborhood, there's like 5 or 6 right now at least on the market. And the ones that are going quick are the ones that sellers are giving some credit. But they're not getting asking prices right now. They're not. But I will say this, knock on wood, I haven't had an appraisal come in low, so the value's still in the homes. I bought it in March, and I already have almost $100,000. It appraised almost $100,000 over what I bought it for. Not even 6 months ago. So that's a good thing. All right, so condo sales. The average sales price, again, pretty steady on the sales prices. Although you see condo or single family homes are starting to come down a little bit, but still relatively flat. And that's kind of to be expected. I'll be interested to see what's going to happen with the mainland. But right now we're looking pretty good. And here's the other median days on market. Okay, this is a big increase month over month in single family homes. All right, so. You're up to median days on market 18, and then a steady rise on condos days on market. So you're starting to see homes stay on the market longer, which is good for inventory, which is good for buyers. And then let's look at this last one we'll look at is pending home sales. All right, this is really a big indication of where we're at right now with interest rates going up. You can see this huge drop off at the end of August down to September, huge drop off in the pending home sales, and that's basically those are the number of homes that have accepted offers on them during this month of September. So big drop from August to September. Not as big a drop for condos, but still something that you love looking at numbers. I kind of like watching this. And we'll see how this plays out. But inventory's up, but normal during this time frame for actual inventory to go down because it's kind of right in that lull between the start of the school year and then the holiday season when people start moving, because that's usually when that's the second, in the military we call it PCS season. That's the second PCS season. Inventory's going up. It's going to continue to go up, I think, as we get into the Christmas or November, Christmas, December time frame. If rates kind of settle down, you're going to start seeing those houses move quickly. If they go up, if rates continue to go up, I think you're going to see these houses sit a little longer.